I'm not surprised that the market bounced back a little bit. Um, I'm not going to say that the sell-off was an overreaction, but the market had been up 9 straight weeks. So any bit of bad news was going to trigger the sell-off, and the bad news in this case was good news because the jobs report came in so strong, at least on the surface level, and you're dealing with big numbers. So, you have a Dow at 50,000, you have NASDAQ at 25,000. And so you start seeing 1,000% or 1,000 point pullback, and it's a 4.5% drop. And, it,
Right.
it was going to happen. But this week we're going to get the CPI and PPI. I think CPI comes out tomorrow.
I think CPI is Thursday, Wednesday usually.
Yeah, so you're going to see CPI and PPI. I expect CPI to come in hotter than last month because it's going to follow the PPI from last month. And I think the key number again will be what the PPI says to see if inflation is continuing to heat up. So
yes, let's take a look at, let's go ahead and Thomas, I want you to talk a little bit about, I'm hoping everybody out there can hear me now with the audio issues. Thomas, talk about what you're expecting with SpaceX IPO. That's the big thing to talk about too. You just talked about all the economic data happening. Yeah. But let's talk about that big SpaceX IPO happening on Thursday. Is it going to be a massive market event? Do you think it's going to be a non-event? What is your prediction on what's going to come later on this week?
Oh, I think the SpaceX IPO is going to be a massive market event. It's going to be an historical event. I'm afraid that there's going to be a negative connotation to it because the valuation is just so wicked high. I mean, it is like beyond outer space. So high, so much interest in it. I think that there's really no place for the stock to go but down once it opens. I think that we could see one of those really massive down days or just wicked volatility for a few days. But I think we're going to see a market that opens and sells off pretty hard for a while, and then it'll take it quite a while to rebuild some traction before those initial investors start seeing some gains again.
All right, very good. Let's go on to some of what our viewers want to hear about today. I'll start looking at the chat here in a minute. Again, we had lots of technical difficulties today, so I'm a little behind on actually looking at the chat and what you guys are having to talk about. So I think I want to talk a little bit about Oracle first. I'm going to pull up their chart here in just a second. We've got Oracle earnings coming up this week. They were part of the tech drop last week. We know we saw AVGO, Broadcom go down even after a pretty good report this last week. Do you expect that to happen with Oracle this week, Thomas?
The way the chart is set up, the market could sell off some more after these results, but we're expecting a really good, solid report. I think the big thing that the market's going to hang up on is the lagging nature of how the backlog is growing. Oracle's in a huge business ramp right now, but a lot of it's tied to future business. Next gen technology, data centers built with the Vera Rubin technology that's not even been released yet. So we're going to see pretty strong results today with the modern day story, but we're also going to see a lot of strength in the backlog. I think that backlog is really what's going to drive the action over time because that's the real opportunity. Turning all the debt Oracle's taking on to build the data centers, converting the backlog into revenue. That's going to start happening next year. But I think this report is really going to play in all of those things, should affirm and strengthen the market. So maybe we get a pullback based on a sell the news event. I think we'll probably find support in the 200 region if we even get that low, and then see a nice rebound after that. I think longer term Oracle is going to be setting all-time highs. Could be doing it before the end of the year.
That's a pretty big estimate for how soon that could be happening for Oracle. Let's see a few of the things that people want to talk about today. I just saw somebody put, Chris, that they're looking to talk about Coinbase, that there's a big move in that stock today. So let's take a look at that market a little bit and maybe which tickers that you're looking at there. Thomas, is there another market that you want to cover today? One is WMT. I see that ticker right away here that someone wants to talk about. So I'll pull up WMT and then Coinbase as well.
Right on.
Chris, are you taking a look at either one?
I'm taking a look at Coinbase. You said Coinbase, so I'm getting it up right now to try to see.
See what's happening there.
Mm-hmm.
It has been a little while since we've talked about what's happening in the Bitcoin market. Some of what I'm seeing in the chat, again, I'm just starting to take a look at it. But people are talking about a lot of market moves based on a tweet or a headline or what could be happening with the administration right now. I'm not sure if that has any connection to the Coinbase story, but I know we have certainly seen that play out in the market in many, many ways this year so far. Yeah, taking a look at the Coinbase chart, it does look like quite a low chart right now. I'm going to pull that up quick. It looks like this has been on quite a bit of a downtrend, which tracks with what's happening in Bitcoin, but I don't see the rebound showing up as much. It looks like just maybe a 6% rebound today.
Yeah, I'm looking right now, and it looks like the reason why it might be going up a little bit is it looks like there was some movement in Congress about the crypto regulation. So I would presume that's the Clarity Act, which would be bullish for digital currencies, not Bitcoin necessarily, but
Yeah.
it looks like Bitcoin had some sort of it looks like Bitcoin was pulling back heavily, but it kind of stabilized around 63, I think. So I'm thinking that's the reason why Coinbase is moving up today.
All right, very good. Thomas, I'm going to have you look at WMT. What did you see that's going on there?
Well, so Walmart, it hit a top earlier this year, and it's pulled back, but since that last earnings report, it's kind of stabilized. Market's just stabilizing around the 150-day moving average. I think the uptrend is still intact. We'll probably be retesting 130 here, if not real soon, then not too long from now. Possible Walmart will stay rate bound up there where it is right now, but the long-term trajectory with the business is positive. It's still been performing pretty well. Capital returns are still pretty solid. So I think that over time, Walmart will eventually set a new high. It's just a matter of time, I think.
Yeah, is there anything happening with Walmart? I know you mentioned a little bit after their earnings that anything happening that would be a good sign for Walmart moving into the summer season, the fall season, before we get into the holiday season, talking about that. Anything in the economy that would impact Walmart stock? Any potential catalysts coming for Walmart stock?
Well, Walmart's real strength is in its everyday low prices. It's been taking market share ever since forever. Really accelerated that post-pandemic. Current conditions have people trading down. It really is still the leader for retail. And so that's what its strengths are right now. With inflation really pressuring everybody, people are going to be looking more and more for those deals, and Walmart really is the place to go and find everything at a pretty decent price.
Yeah, one thing I just noticed, Thomas, is the first time I've actually looked it up and seen this. Institutional ownership of Walmart is less than 30%, which seems really odd that there's such a blue chip company that's been around for forever would have such low institutional ownership.
So that's another stock, like I believe it was Oracle's one we were talking about with the low institutional ownership, but it's offset by a 50% insider ownership. Walmart's owned by the family. They own more than 50% of the stock. That's why investors should really love this one, because the Walmart family operates this thing as like a family holding that pays them dividends. So when you buy shares, you're becoming part of the Walmart family, and you get to benefit from that generational wealth.
All right, very good. Thomas, the next one I'm going to have you look at is ONDS, ONDS, and SMR. We had a couple of people ask for that same one, or those two stocks. So ONDS and SMR, you can look at both of those. Chris, did I give you a new one to look at or not?
You did not.
I did not. All right. Well, let's look at one that we talked about recently, and that's Applied Digital. Somebody just asked about what's going on with the Applied Digital stock. And I know you and I just had a really popular video that came out on Friday, kind of comparing all of the different what did we call them? Data centers as REITs, like these companies that are building these data centers with the goal of renting them out. Let's look at Applied Digital to see if there's anything happening today that moved the stock since we recorded just last week. And if you haven't watched that video yet, you can find that. Again, Chris, we just put that video out on Friday, so it's pretty new. Here's a look at their chart right now. It looks like they are down about 8% in the last 5 days. They had a little bit of a rebound today, up about 3% or so. But this chart has been choppy, and it's been choppy and pretty quickly. The moves have been fairly rapid, and I'm not sure if it coincides with what happened with their earnings report. I do believe they reported earnings fairly recently. And Applied Digital, on your list, you were ranking the different data centers as REITs.
Right.
And this was the most risky on your list. Why was that, Chris?
Well, you would ask me that question, Bridget, when I was looking somewhere else.
That's fine. I know. I want to give you some time to actually look at what's happening. Again, if you've not been on MarketBeat Monday before, normally we have fewer technical difficulties and are live every day right at market close. And we just take a live look at the stocks that you share in the chat. So our guys have not looked at any of these ahead of time. We're just taking a live look at some of the names that you share in the chat. They're giving themselves a quick little look through on our site to see some stats, and then are going to share their analysis. So that's what Chris is doing right now. He's just taking a quick look at what's happening with the stock since we last looked at it on Friday. Chris, any updates?
Yeah. So no, I wanted to go back and make sure I wasn't contradicting something I had actually said in the video. So the reason why I put Applied Digital as the most risky of the 4 that we looked at, and just to remind, not to remind investors, but to tell investors, we looked at Nebius, Iron, CoreWeave, and Applied Digital, and I felt it was the most risky of those 4 because it has not only the risks that come from being in the neo cloud sector itself, but it's directly exposed to CoreWeave's risks. CoreWeave has the risk of it's got a lot of debt right now. Let's just say that. So Applied Digital has that risk in addition to its own risk.
Okay.
Now, as far as today goes, I'm trying to figure out why it moved higher.
Yeah, it does look like it's moving in extended trading. That's what somebody said in the chat here really quick, that there's some extended trading moves. And also that looks like there's potentially a new announcement that's out. So that could be about a new facility. So that could be part of it.
Yeah, there it is. It signed a 210 megawatt lease at Delta Forge 2. So when we were talking in our video a week ago, Friday, we had said it had 4 facilities. This is the 5th one now that's going to be going online.
All right, very good. That's a quick look at that. Again, if you haven't seen the full video that we did, make sure to go back and watch that. It was called Buy the Dip, and that was on Friday. And so that's a lot of good names to look at there. Or maybe it was 2 weeks ago. I can't even remember anymore. All right, let's look at, I missed in the chat a couple of super chats. Thank you guys very much for doing that. Again, if you're new to our live stream, a super chat is just a way to make sure that I cover a stock that you want to hear about. There's so many people who comment in the chat that sometimes I miss some of these tickers. So doing a super chat highlights it pretty well for me. So Chris, I'm going to have you look at, it looks like IonQ was one of the first one. Wants to hear about MU, IonQ, Iron, which we just kind of covered that area, and NVTS. Those are some. So why don't you just do MU and IonQ first, and we'll get to the other half of that in a minute. Let's move on to you, Thomas. Which ones were you looking at?
Ondas and then SMR.
What's up with Ondas?
Ondas market is strengthening and kind of winding up on the improving drone outlook and the company's shift into U.S. defense contract manufacturing. It's had some recent contract wins. The outlook is definitely improving. We can see that in the price action. Support is slowly strengthening and moving higher over time. We've had a recent spike up to $14, retesting those long-term highs. but short interest is also in play. So the shorts still see a lot of risk in the company's execution. Short interest is about 30%. So right now, I would expect to see volatility continue until the subsequent earnings release, probably a top around 14, bottom near 950, possibly moving higher over time. And then I think that earnings release will trigger the breakout. I think that's on the way. We should see some strategy affirming news, revenue ramping, pathways to profitability, improving revenue forecast outlooks, just that total package.
All right, very good. And let's take a look at the other one that you were looking at.
Yeah, SMR. That's
This is
a new scale.
Yes, this
Right,
one's
so
been
this
a
is
rough one. This one's been super rough for really since the start of the year.
This is a promising small modular reactor company, but I think if you look at this stock compared to Oklo, the market has kind of made its decision. It's far more interested in Oklo right now. So of the two, that's the one that I would be focusing on. I think they're both on track to commercializing their technology, but I think Oklo is a little bit far more advanced. Its strategy is more vertically integrated. I think that the longer term revenue generating potential is greater.
Yeah, so I'm going to pull up Oklo's chart here in just a second, but I was just kind of going through some of the stats on SMR. I think one thing I want to look at is there was a lot of analyst expectation on this one. Kind of like Applied Digital, that one also had almost about 50% upside. Ondas had a similar one where there's quite a bit of upside from analysts. So it looks like they're seeing something here. They're seeing potential here. Do you think it's possible that we get to these high estimates of $25 or even the consensus price target of just under $16 by the end of the year? And what would it take for SMR to see that kind of a move?
Oh, well, it would take a pretty significant catalyst right now. Like I was saying, as far as the development story goes, SMR is falling behind Oklo. The market's just not as interested in it right now. So it would take a pretty strong catalyst to really advance its timeline to get the market interested again. And I'm going to look at these analyst forecasts and see what the trend and when the most recent updates were. So it's been over a month since any fresh revision. They've been lowering targets. So yeah, I mean they've got almost 50% upside indicated, but they're definitely leading to the low end of the range, which is $7. So right now the stock may be overpriced based on what they're saying.
Yeah, I find some of these really interesting. Looking at some of the later ones, these were back in February when they were downgrades happening from $60 down to $25 or $55 down to $20. And that was the end of February. So that was
the reality check after last year's run up.
Yes.
There's that swelling outlook for growth. And then the reality of, this great outlook, but it's still going to be 2 or 3 or 4 years before it happens.
Right, exactly. Because you talked about Oklo, I'm going to just pull up their chart too. I mean, they're in a very similar spot to SMR. They went up crazy high last year, and they're still on a major downtrend right now. And so very similar story. I know you said that Oklo is for you a stronger buy than SMR, but they right now appear to be in their stock charts anyway, very similar stories.
They are definitely similar stories, but if you compare them more closely together, you can see that the action is a little bit more vibrant in Oklo, and the market is also above most of its moving averages, where SMR is more below the moving averages, and that just shows the difference in the market, where the long-term traders and the smart money and the institutions are probably buying Oklo, and they're probably distributing SMR shares.
All right, very good. All right, so, a super chat I missed earlier. Thank you very much for this one. It's SAR. We want to take a look at SAR and then CEG as well. So SAR and CEG. I'll have you look at both of those, Thomas. All right, Chris, you are looking at
Micron and IonQ.
We'll look at MU first. This one was one that went down 10% on Friday. Have we seen any recovery today? It looks like yes.
Yes. So we did a video, Bridget, on Friday where we talked about stocks that you could have bought the dip on, and I could have put Micron on this list. It was just the fact that I didn't think it had dipped far enough from where it went up. But it looks like that was it.
Yes.
If you wanted a dip, that was it. Micron's looks like it's in great shape. And I think the real catalyst for investors was the fact that it hasn't reported earnings yet. We're at the tail end of earnings season, and they don't report till June 24th. So that could be a potential catalyst, as if it didn't have enough already with the expected increase in memory prices. So, you had your dip on Friday, and it looked like that might have been what you were looking for if you wanted to get in.
Yeah, it does look like right now from the chart that it is still down from that peak that it saw last week. So
Yeah.
it's recovered. They're still down a little bit. I think that the earnings catalyst is an interesting potential reason
Yeah.
to be looking to buy it right now. Do you think that there's any chance that earnings could be a negative catalyst for the stock, that people are going to be expecting so much from Micron that maybe it doesn't see the spike? Or, I mean, again, looking at their last earnings report, they had such a huge beat, and that was another reason why we continue to see this stock just skyrocket over the last few months. What do you think? Any risk that the market's going to be expecting too much from Micron?
Yeah, sure. I think you could see a Broadcom-like outcome for Micron, especially if they don't issue bullish forward guidance. I don't think there's much question that they're going to do fine on the top and bottom line. It's going to come down to what are they saying as far as the forecast.
Yeah. Okay, I think that's a great look at that one. And then, so MU and the other one?
IonQ.
IonQ. And we saw IonQ, and that was one of the biggest losers on Friday. I did a quick little short talking about the stocks that were down the most on Friday, and this is one of them. It looks like it did rebound pretty nicely today.
Made up for all of that.
Do you think that there's any stock behind the move? Like, why did we see such a big move to the downside on Friday and a big recovery today?
Well, as far as the downside went on Friday, I think that was just part of the general tech sell-off, and quantum stocks were going to take the brunt of that because many of them were looking pretty frothy at where they were. As far as the comeback today, I'm a little skeptical on it. Now, I'm going to say this is just the few minutes I've spent looking at it. If there's investors in the chat that want to challenge me on this, there's a lot of quantum stocks that went up as a block because there was an announcement made about the federal government receiving or distributing funding to several quantum companies. IBM got the most with $1 billion, but IonQ is not one of the stocks named in that. So the stock's going up. Some of that's just a bounce back from the sell-off on Friday, but I'm not necessarily seeing that the stock is going to get a lift from that specific event.
Yeah, I think that's an important one to mention. We did a video on that one too. Again, I know a lot of you on our MarketBeat Mondays, you're here every Monday for this live stream, but I hope you're checking out our regular videos on the channel too, because we cover a lot of these topics individually too. So we had a video just last week too, talking about these quantum companies and the big boost they saw from that $2 billion government investment in a number of companies. Like you said, Chris, the IBM was the big winner there, but a lot of those quantum names got a little bit of a boost. Interesting that IonQ is not there. I think you're right. That is definitely unique to see, but the downturn in IonQ didn't happen immediately after that news broke. It came a few days later. So I'm not sure if they're directly connected or not.
I don't think the sell-off was connected to it, and I don't necessarily think the rebound's connected to it either, but there was some speculation that the rebound is happening as part of this halo effect on the whole sector because of the announcement.
All right, very good, Chris. Thank you very much for taking a look at those. We've got a couple of others to look at here. I'm going to have you do, I just think that this is interesting. Somebody asked if Sony is a sneaky robotics play. So take a look at Sony and what's happening there, and we'll come back to you in just a second. All right, Thomas, you were looking at SAR first.
Yeah, so that I think is a mutual fund, and I don't think we're interested in that. It's not what we really cover. I would say that the performance looks pretty poor over the last few years, so I might stay away from it.
So this is a mutual fund. Again, somebody did a super chat for this one, so I'd love to do a little bit of a look at it. What's included in this?
I mean, I can check. I mean, it's a mutual fund. It's probably got a pretty broad base of holdings. I'll bet you Nvidia's in there somewhere.
What's your general view on these kinds of funds and these kinds of stocks?
It's just it's a passive way to invest. To me, you're hamstringing yourself because you end up paying somebody else to do a lot of work for yourself. But not everybody wants to do their own investing. Right. The page doesn't really show what's in it. It says that the profile. Oh, it's a BDC. Right. So BDCs are also pretty high risk. It's got a high yield. They tend to return a lot of capital, and not like capital they made, but just like return of capital. It's got a high yield. That's about the best you can say for it.
For you looking at this chart, is there anything that entices you to look at this as a potential investment right now?
The high yield, but you're not going to get very much stock price appreciation, I don't think.
All right, very good. Anything else to share with this one? Again, it's a unique way to look at investing. Explain again really quick, Thomas, what this kind of investment is. Again, this is for newer people who are new to investing. What
Right.
exactly is this?
Well, a business development company is a tax-sheltered vehicle that allows average investors access to middle market investments that they wouldn't be able to get otherwise. So it's a risky market. It's like bridge loans and mezzanine loans that help like risky startup businesses kind of make it through from startup to profitability. So it is a good way to get access, but it's a highly risky market. And like I said, as far as your capital goes, it ends up kind of being a spinning wheels. You're not really getting a lot of traction. The big goal with these things is the dividend. They try to make an investment on their income on their investment, and they try to pay you the dividend from that. But the 14% yield on this one, to me, is kind of a red flag. It's real high, not necessarily like out of reality high for a BDC, but I would be suspect of it. And when you look at the stock price, and you see that it's pretty much been flat for like almost 20 years. If you want to get a 14% yield, this might be the stock for you. But I mean, it's a BDC. The stock price isn't going anywhere, I don't think.
All right, that's a good look at that. Now let's look at this one. This one's more interesting. This is Constellation Energy, CEG. And this is a name that came up a lot last year when everybody was talking about energy. I believe Constellation has a nuclear energy connection as well. But this year, the stock has not been doing much of anything.
Well, Constellation Energy is the fourth largest U.S. electric utility. It has the largest U.S. nuclear fleet. It's got some old reactors that are coming online right now. So as far as active energy production, it is probably the number one play in electric utilities for data centers and AI, because it's going to be the company that has the most available capacity to help these facilities run. So that's what you see in the stock price. The last year was that run up based on AI demand. Right now, the market's pulling back. Looks like we're still, pretty well supported. The market might pull back a little bit more than the next couple of weeks, a month or two. But I think we're down in the buying range right now. I would expect to see the market gaining traction. I think a move below like 240, 245 is probably unlikely. Not out of the question, but right now it looks unlikely.
Yeah, Thomas, for me, looking at Constellation right now, I think the confusing thing is to see the price action that's so negative for this one, even when they've had really solid earnings. You look at their earnings report, and it's doing well. What's your thought there?
I think a lot of it's been price driven. And again, a lot of this AI demand is kind of back-ended, where we know all these data centers are coming online, but they're not really going to be built until next year or the year after and the year after that. So, yes, this is a really awesome outlook, but it's going to be kind of a slow crawl to get to it.
All right, very good. Let's look at I'll have you look at some other stocks. There's a lot of people asking for ones we see all the time. It's hard to know which ones to pick here. If you want to do a super chat and you want me to talk about something, do that. It'll be easier to know what to pick. I'm going to have a new one because it's up apparently 2,800% in the last, I don't know in what time frame that is, but it's INHD. So take a look at INHD, Thomas. And I'm also going to have you look up ABAT. I know we've talked about that one before. ABAT and then INHD. All right, Chris, let's move over to what you were looking at.
I was looking at Sony.
What do you think about this as a robotics play?
Yeah, actually, Bridget, this is kind of fascinating, and I've only had a few minutes to look at this, and I'll be honest, it surprised me, and I hope I do the story justice, because when you brought up Sony to me, I couldn't help but shift to gaming. And their gaming units under a lot of pressure because of the memory issues and the cost of memories and such. But turns out that their imaging and sensing solutions, and that's where the robotics story lives. They are a leader in the robotic vision. So their technology is indispensable, let's just say, to that infrastructure, may not be fully priced into the stock yet. That's the good news. The cautious note is I was just looking at their earnings report, and it looks like that division is only forecasted to generate about 16% of the revenue for the company this year, whereas the gaming is supposed to be well over 33%. So the question here is really one of, are they going to grow that number, the 16% number, enough to offset what they're going to possibly lose in the gaming area? And of course, we know that Sony's a conglomerate. They've got their hands on a lot of different pies. So yeah. Interesting. I think, yes, this is possibly a sneaky robotics play. But in terms of that to happen, the stock's going to have to be re-rated. And right now, analysts are not rating it like it's a robotics company.
Right.
And so for that to happen, they're going to have to see the revenue growth, which is going to mean you're going to have to see announcements of contracts and different things like that happening. But
yeah,
interesting story.
I think the robotics story is interesting, like you said, but I do think you can't ignore that earnings report that just came out where it was a really big miss. And you said, I think you said that's tied to the gaming not doing as well, right?
Yeah, the gaming is down because they're under pressure with the memory costs. And so it's putting pressure on their margins. And as I said, the robotics is a real story, but it's only about 16% of the revenue.
Okay, interesting. Let's do another super chat here, Chris. I've got another one that just came up. Looks like SE. I'm not sure if I know either of these. So SE is one, and then SEA, LTD, and ADR. Look up any of those, even if you just find two of them that are interesting to talk about. So SEA, LTD, and ADR. Vlad, thanks for doing that. Super chats make it easier for me to pick what to talk about. So I'll have you take a look at those. Thomas, let's get over to what you were looking at.
All right, hang on. So the first one was INHD.
Yes, Inno Holdings.
Right.
That's right.
What was it?
INHD. That's correct, and it's a wild one. I'm just gonna pull the screen up because just even
Inno
this number,
Holdings.
it's up 3,600% today. Right. I believe this. So we started doing a little while ago. We started doing the top gainer shorts. So I'll just do the top 10 or top 7 biggest gainers of the day. And this one has shown up a couple of times. It's been growing, not just today, even though it did have a huge jump today, but it's been having these big jumps like this one. I'm not even sure what the company does. Let's take a look.
Oh yeah. So when I first pulled it up, I wasn't getting a company at all. It was some kind of crazy data from India. But yeah, this looks like some kind of a scam.
Yeah, this looks wild.
I mean, for real, because the stock has had 1, 2, 3 reverse splits.
Mm-hmm.
Something is not. I mean, not is not right. 2 reverse splits. Oh, there's 3. Yeah, so it's had several reverse splits recently. And then today it jumped. Let me see, because I can't find any information on like
On what
legitimate websites.
Yeah, on
Here
what
we
this
go.
actually is. Yeah, again, a reminder for everybody that this is a cold look at any of the tickers that you guys put in the chat. So
Yeah.
none of these are recommendations. We're not saying go out and buy these stocks ever during a Market Beat Monday. These are all just a cold look at what these companies are. And Thomas
last
is
news,
not finding much about this one.
the last news was dilution, recycled consumer electronic devices, sources and purchases, smartphones. Okay, I guess it's recycling phones. I don't. Let me see if I find some other news. All right, so some kind of a deal with a Hong Kong AI provider to build an automated sales agent and customer system for used mobile phone trading. It sounds like GameStop for used phones.
I mean, to see a jump like that, let's just talk about that rather than just evaluating what this company is. Let's evaluate that kind of a jump. When a company has a
mean, that's
3,600% jump in one day, I feel like this is a sign to stay away, right?
Well, what's nuts is that jump is so huge, but the stock price has been down so much you can't even see it on the chart.
No, you can't.
It's
It
just like, I mean,
and
right.
it's still down in the 1 year performance. It's still
And I
down.
don't know. Is that dollars or is that like Hong Kong dollars? I mean, I don't know.
I don't know. It's a wild one. Well, we looked
Yeah,
at it. Thanks for bringing that to our attention. I'd love to hear from you guys if you guys end up doing your own research on that one. If you find out what it is, let us know next week because this is a new one. And we don't have enough time in this live stream to give this one much more attention. So let's go on to the other one. This one I know we have talked about before at some time.
So American Battery Technology Company, I think, is a little bit more of a safer, risky play. But this is a battery recycling company. They're taking any kind of battery, lithium batteries, breaking them down, getting the rare metals out of them, recycling those into usable products, and then selling them. Right now, revenue is good light. I think one of the recent catalysts is they got a grant reinstated to help it advance technology. So I think right now it's still in the pre-revenue, like a pre-revenue transition phase. But it is an interesting technology. It has some tailwinds and some catalysts. So this might be, like a really small position speculation. Get some exposure, but don't expect too much. Definitely don't get too much exposure, too much risk. But if it starts to develop a positive news stream, you can start adding to that position.
Yeah, I think this is one where maybe people are hoping for the next AMPX, which of course people have asked you to talk about many times. So we might get to that one next here in a little bit. But this is one where it's very early yet. Like you said, the chart hasn't taken off like crazy yet. But you can look at some of those things when it's an early company like this. You see their earnings; they're bleeding money right now, still working to make this profitable. There is some short interest. It's not 30%, but it is 16%. So that's something to take a look at here too. And then, of course, when you look at like institutional ownership, is anyone else actually buying this stock who's not just a retail investor? And there's not a lot right now. So very small company, very early, but it could be an interesting one to look at because we know that the battery need is absolutely there. Do you think that there's any comparison here, Thomas, to AMPX?
Probably not. This is a rare earth play, but it's a niche play. It'll probably be closer to one of the metal recycling companies. Certainly have long-term business, but it's going to be real vulnerable to underlying price swings in the metals. And then again, there's the potential for disruption of battery technology.
Okay. And just because I talked about it, I'm also going to pull up the AMPX chart right now because I know you can talk about that anytime. I think the thing that people want to hear about is we're seeing some choppiness. We're seeing some ups, sharp downs. We saw a really sharp up the last couple of days last week, and then it came down quite a bit, down about 13%. Is now a buying opportunity? Are we expecting more choppiness until the next earnings report? What do you think is going to happen between now and the next quarter, Thomas?
This one might stay choppy for a while. The short sellers are still in this, so they're kind of capping gains, they're filling into the rallies. But the outlook is still strengthening. Upcoming results are supposed to show another acceleration, improve the path of profitability. Will probably include some updates on the backlog, probably be growing. I think we just got an analyst, not an update, but a revision. We had an price target. I think they set it at 37. Let me double check that real fast. But that would be a new high target. Just want to make sure where that was.
I see 33 is a high target, right?
Yeah. One was set today, and I don't think. Yeah, there it is. Yeah, it popped up. Yeah, 33. Because it didn't show up originally. It showed the initiation, but not the target.
Mm-hmm.
Target 33. So that would be a new high target. And more than that, that is a new all-time high for the stock, well above the previous highs. So to me, that's a very bullish sign.
Yeah, that is. All right. Thomas, I'm going to have you look up a couple of super chats we've had. Thank you all for doing those. One is HYLN. This is a new name. I don't think I've heard of it before. So HYLN. And then we had somebody else wanting to hear about some that we definitely have talked about before, and that's NVTS and Redwire. So we can look at those two here in just a second. All right. Chris, you had quite the list to look at. Which one do you want to look at first?
I did. So there's two I picked out.
Okay.
SE, and the name of the company is C Limited. So
Got
I
it.
think that's where the SEA came from.
Yep.
And the other one I want to look at is AVR.
Okay.
So
go.
so those are the two I picked out.
All right. Go ahead with C first.
Yeah. We've talked about Grab a lot on this channel. I know Thomas is a big fan of that one. C Limited is similar to Grab in Southeast Asia. Where it's similar to Grab is that they both have e-commerce and fintech divisions. Where they're different is Grab focuses on ride hailing, and C Limited has a gaming division. So I can see why this is coming up as a stock that investors want to look at. It just had a really strong quarter. They generated $7.08 billion in revenue, which was up 46.6% year over year. It blew past consensus estimates. So it looks like the stock might be meriting a re-rating at this point. It's trading about 83% below its consensus price target. Price targets are generally, from what I'm seeing, they're moving up since the earnings report. And the stock is trading at a significant discount. It's down over 48% in the last year. Looks like it's been making a bottom since around middle of March. So there could be some consolidation getting ready to happen. There's some real risks here, Bridget. And one of the things is that although it had 47% revenue growth, it only had about 6.7% net income growth. So it's showing that they're spending heavily on investment. And so that's hurting margins, even though they're getting a lot of revenue in. Is that a reason not to buy the stock? No, but it's something I'd be watching.
Yeah,
and then they also have TikTok is a genuine competitor for them, and it's a genuine threat in terms of e-commerce.
Interesting. There's so
Yeah.
many interesting things about this company. I'm glad that you guys brought it up because it's not a name that we've looked at before. I think that
Correct.
there's not a lot of shorts happening here either. There's very low short interest on this one right now. Earnings is not a huge concern, but it definitely was a miss this year. And I wanted to also look at that ownership. There's a decent amount of institutional ownership on this one, which is surprising for a company that doesn't make a lot of headlines, that we haven't really heard about much. It's not a stock many people talk about. So,
Yeah, it looks like it hasn't been much institutional activity in the last few quarters, though. But yeah,
okay. Interesting. Do you think now is a time to be looking at it? Is it a good entry point for this one? Or is it still one that could continue to struggle along on this kind of slow and steady downturn?
I think it's the chart showing that it's forming a pretty good bottom. It looks like it's consolidating. The question is when or if it's going to make that pivot back higher. I haven't spent enough time with the stock to be able to answer that, but they are projected to grow earnings at about 44% this year, which would be it would be a repudiation of what I just said, where the net income wasn't growing when the revenue was growing. If they can show that has turned, that's a bullish argument.
Okay, very good. All right, Chris, let's do the other one that you've got, and then I've got one other stock for you to look at here. AVR, Antares Technologies Global, is that right?
Yes, that's what I found.
Okay, this one's had a positive chart instead of that negative one.
Yeah. This is a medical technology company, kind of still falls in that biotech, but it's med tech. And the risk and the reward are the same thing. It's a one product company right now. It's called the DUR-AVR transcatheter heart valve. It's still in clinical stage trials, and the risk is that it has to prove that it's a generationally better product than anything currently in that market, and that includes competing with the product from Medtronic. So that's the risk and the reward in a nutshell.
Yeah,
it's in trials right now, and I think the results of the trial will depend on how the stock goes.
Yeah, I think that's a great look at this. Would you call it a biotech stock, or is it slightly different than that?
I would call it a med tech.
Med tech. Okay.
It's going to play with Medtronic. It's in that same space, Intuitive Surgical, that space, but it's a much smaller company. This is only about an 809 million market cap.
Very small stock. Okay, great. Well,
yeah, no product today, one product in clinical trials, stock selling for under $10. That's your risk reward in a nutshell.
Yeah. I also think for a company of this size, again, a tiny company compared to all the stocks in the market, and it's got, looks like 5 analysts covering it, and all of the price targets that are currently out there for it are in that $15, $16 range, pretty consistent on the price targets. Right. There's an upgrade there to 18 just last month. So potential upside on that one, but you said risk and reward. That's something to keep in mind for that one. All right, I had one other one I wanted you to cover, and that's OCC. Okay. Apparently they had a nice double beat on earnings earlier this morning. It's now a profitable company. So that's from one of our regular viewers. Thanks for watching. All right, let's get to Thomas. I had you looking at a couple that all came in as super chats, Thomas.
Yeah, the first one was Hylian. They make generators. They were being used for a variety of industrial uses, but now they're transitioning to the data center AI shift. I think there's traction here. You don't always see it in the stock price. I think this is one just to watch over time based on the results of Bloom Energy. This one's probably going to be a similar pattern, just with ramping demand for its product. We'd want to probably dig in a little bit more and make sure more about the product, but it looks like it's got utility and it's going to be deployed here pretty soon.
Do you think that I know you just compared it to Bloom Energy, which is a pretty huge comparison. I know a lot of people who've been in Bloom who've done really, really well. Do you think this one has a lot of growth still ahead, or has it already run up so much? I know we're seeing almost 265% growth in the last 3 months, almost 200% growth in just 1 month. Has it already run up too much to be interested in it, or is this just the start?
I mean, probably not. The data center build out's going to be years in the running, so it's probably be a while before this stock tops out all the way.
All right, interesting. Thanks for bringing this one to the list. Again, it's not one we've seen on MarketBeat Monday before, so I think it's a good one to look at. All right, what's another one you want to talk about, Thomas?
Navitas, so this is industrial chips. Those high power, like gallium nitride, silicon carbide chips. A lot of data center demand, a lot of applications in technology and IoT. Totally see this in the stock price. Analysts are lifting their price targets, expecting really robust results. Based on all of the data center built out stocks, all of the infrastructure stocks. This one's probably going to be following suit with strong results and strong guidance. So to me, this pullback would be a buying opportunity.
Yeah, this one has been on the show multiple times. It's had a really good year for a lot of investors. I think we first talked about it on a show when it was on the show and it was quite low, and it's up almost 300% this year. Analyst forecast not catching up with this one. That's not unheard of. We've definitely seen that in this AI build out story before, where these stocks run up far ahead of what the analysts are saying. Any concern for you there, especially on this relatively newer, still small company?
Well, running ahead of the consensus estimate sets up potential for it to pull back. The worst concern is that it's even above the high end of the range. So that sets up even more potential for a pullback. But based on the trend and the expectation for results, I would expect to see analysts continue to lift their targets and for them to provide support for the market over time. The market will correct back down to those levels, that consensus level. But then once it, kind of re-engages with the market in that regard, the upside will resume.
Yeah, just looking at this chart again, I know we had this on our MarketBeat Mondays when we were talking about it around this time frame when it was, less than $9, and now we're talking about an almost $25 stock. So it's a great show. That's why we love MarketBeat Monday. You find a lot of interesting names, and some of them take off, others do not. Let's talk about one that has absolutely taken off, and that's Redwire. We have been talking about Redwire for maybe the last year or so. This stock went crazy last week. How is it doing now? I know it saw a little bit of a pullback.
Yeah, it's pulled back from its peak, but I think that there's still, a strong and strengthening market. We've got volume ramping, MACD converging. The fundamental story is improving contract volume, deal pipeline, revenue visibility, all being bolstered by the space case. Space is about to be unleashed. Industrial commercialization of space is accelerating. The SpaceX IPO is supposed to accelerate the industry again. Redwire is very well positioned within that. I think it may struggle to cross the 24 line here in the near term, but over the next few quarters, as results come in and we see the revenue ramping and the path of profits improving, we could break to new highs.
Yeah, I think one more estimate I want to hear from you for Redwire is, do you think we're going to see more moves in this stock, positive or negative, on Thursday when we actually do see that IPO happen for SpaceX? I know once more news about SpaceX came out and the official launch date or IPO date came out, that's when we really started to see Redwire really take off. Do you think we're going to see any more moves around this stock later on this week?
Oh, for sure.
Yeah.
Right now, it looks like we're down at support. I don't think they will go below 18, but that's possible. If that were to happen, the market will probably sell off more deeply. But right now, 18 looks like the line. Pretty decent entry point. The SpaceX IPO may trigger some more money to flow into this stock. We could be testing $24, this month or next month.
Okay, very good. I know we're late. We started late, so we're going a little bit late. Thomas, I've got one other name from a super chat. Vlad, thanks again for doing another one. This is RBRK. I know this is another good one to talk about this week in particular. So take a quick look at that one, Thomas, while Chris does his last stock. So RBRK, Thomas. All right, Chris, you are looking at OSS. Is that right? One Stop Systems?
Oh, I thought you said OCC.
Oh, I'm pretty sure it was OSS. Let me look.
Because OCC had the one where they just did earnings
You're right.
and they
You're right.
became profitable.
You're right. It's OCC. That's my bad. Sorry, everyone. OCC, optical cable. This one had a really good day. This one makes a lot more sense looking at this chart.
Yeah, I would have felt terrible if somebody actually asked for that, and I totally researched the wrong one. Okay, so interesting story with this one. Boy, you've given me a few today, Bridget, that are like, I'm gonna have to like look at some of these stocks a lot closer. So this again is a tiny company. Only market cap's only 167 million, so it's a micro cap company. The timing here matters a lot. The company manufactures domestic fiber optic solutions, okay? That's becoming increasingly in demand because of the data centers, as everybody knows. Right now, at its current size, OCC is going to have a hard time competing in the data center arena. It's gotten a couple of contracts. That's why they saw their revenue go up. That's why the company is now, it got through to the profitable. And it's got a nice backlog. Now, the backlog, having said that, the backlog is 10.4 million. Not billion, million. So it's in the data center play, or the data center arena, but by its own admission, it's going to have a hard time competing at scale right now. So, you know, that's the risk and the reward. It had a nice quarter. It's probably going to keep building on that, but to what extent, I don't know.
I think that's a good point that it's so small that in order to get some of those orders, it has to be able to fulfill them. So actually building out that capacity is going to be huge for this company.
It's only got one factory.
Yeah, I think that's one thing to say. I also think that there's one other discussion point quick before we move on to the last stock, and that's I think that there's so much demand for data centers. Do you think it's possible that they're just going to continue to be at full capacity, that they could expand rapidly? There is, like you said, so much demand. Could, even though it's a small piece of it, could they still continue to be, booked out on orders with a nice backlog throughout this entire AI build out?
I think this is where investors are going to want to be careful. And I think the company could have several quarters of really, really nice revenue and earnings, but they're competing with Corning and they're competing with a company named Belden. And Belden's actually probably the most direct comp to the segments of the data center market that OCC can compete with. And so right now, that would be my concern, is how much of the pie is OCC going to be able to get? Certainly worth watching.
Yeah.
Like I said, you've given me a lot of names today, Bridget, that I'm like, boy, I got to look into these companies a little bit more.
And you know what? We haven't even covered all the ones in the comments. I feel so bad. I can't get to every stock today. There's other Lase, L-A-S-E, looks like another interesting one, kind of in a similar space.
Right.
There's some other names to look at here too. So again, really great stocks in the comments. I wish I could get to all of them, but we're going to do just this last one with Thomas. And then we have to close up today because I have taken too much of these guys' time today so much. Okay, let's get to RKRB. Is that right?
Is it RBRK?
RBRK. That's right.
Rubric,
Here we go.
Right. So this is a data-centric cybersecurity company. Stock price has kind of been struggling for the last year or so as the company, builds out its ecosystem and starts to gain traction. But what we see are results. It's gaining share. It's outperforming. We're growing. Analysts are responding pretty well right now. They lifted their price targets pretty sharply over the last few weeks. So that's signaling a rebound in sentiment. Right now, they're 30% upside at the consensus that aligns with recent highs, or I should say, all-time highs. But, the high end is pushing fresh highs. I think if we see traction still in upcoming results, this market could easily set a new all-time high this year.
Why do you think, Thomas, this one went up so sharply? Was that a reaction to that earnings report? And then why did it pull back so sharply too?
Well, I think it was really a sell the news event
Mhm.
because the analyst response really says it all. It was a strong result. It affirmed what we were expecting and more, led the analysts to start lifting their price targets again. So this market is just pulling back, kind of touching base with the moving average. I think once we do that, we'll regain traction pretty quickly. We'll be back to 80 within 2 days. We'll be up to a new long-term high after that, on our way to retest the all-time high.
All right. Thanks for that quick last one, Thomas. Chris, thank you both for your time today. And thank you, everyone, for staying with us. Again, sorry for all of the technical difficulties today. I know the audio was kind of spotty in some areas, and it took us a long time to actually make this happen today. We will be back again next week, and we are hoping for zero technical issues and that all will be as smooth as it usually is. But again, I hope you got some value out of today and found some interesting names to do some more research on, too. Thanks for joining us, everyone, for MarketBeat Monday. We will see you again next week right at market close.